I'm Scott Purves with Joe Adamson at Purves Insurance. We thought it would be important to record this video to get some information out into our clients and all consumers' hands, because some things are happening right now that we have never seen, and we thought it's worth sitting through an insurance video to get the information. And people are going to want to shoot the messenger, and I don't blame you. We're not asking for sympathy for insurance companies, but consumers need to know what's going on, because we're going to go into some problematic times over the next year or so, and you're better off knowing what's coming than not knowing and being surprised by it. So bear with us for a couple of minutes. We can explain what's going on. And probably the best way to explain how we're feeling inside the insurance business is to think back to March of 2020. We had heard in previous years about swine flus and bird flus, and they were dangerous and they could be a big deal, and then they never turned into what we experienced with COVID. And then all of a sudden there was a guy who flew in from out of country and was sick, and we had our first case. And then there was a rumor about a cruise ship where people were sick, and we weren't sure if they should get off the boat or not. And then it was, okay, everybody's shutting down, and it felt like the dominoes just went boom, 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 boom. And we all had to catch our breath as to what the heck is going on. It's feeling similar to that. So where are we? So for years, and these are the dominoes that we've kind of heard in the background, for the past few years we've been hearing from the insurance companies that through a combination of factors, a bunch of years of major fire devastation in California and more dry weather to come, technological inflation, so what used to be a $2,000 car bumper is now a $12,000 car bumper, those kinds of things. And then of course we went into COVID and all the printing of money and inflation, and so natural inflation. Insurance companies have been saying for some years now they're not able to get the rate increases that they needed, and so for every dollar they're bringing in, they're spending $1.25. And I can hear people screaming at home, but I didn't turn in a claim, and I get that. But this is what we've been hearing from the carriers. Carriers can't arbitrarily increase rates. They have to get approval from the Department of Insurance. And for about a 3-year period, the Department of Insurance would not allow rate increases, or they would only allow maybe a 6 or 7% rate increase. So as all of these different things have been happening at the same time, it's created this environment where insurance companies have said, we have to hit the brakes. So going back to my comparison with March of 2020, in the last month we have seen State Farm and then Allstate in the news saying, we're not writing any more new policies. Farmers has said, we're writing very few new policies. Well, those are the 3 biggest carriers in the state. And some of our companies, we're an independent agent, so we work with Safeco and Mercury and Travelers and Kemper and Hartford and a number of good companies. Our companies have severely restricted and said, we'll let you write 3 new policies this month or 10. Or, like this week, we heard Kemper is leaving the insurance business. Safeco told us no new policies. We still have CIG and Travelers and Mercury who will write policies, but their appetite's pretty narrow. And so so you get your bill right now, you're not able to just call and save 20% in 10 minutes. And the insurance industry's done a terrible job of training all consumers that you can always just save 20% by picking up the phone and calling. But what I'm here to tell you is the carriers don't want new policies right now. So if you make that call, very few carriers are going to give you a quote. And what's going to make that even more difficult is they have all now been approved by the Department of Insurance to take big increases. Everybody, all the carriers, Geico, Farmers, State Farm, Allstate, USA, AAA, all of our carriers, Safeco, Mercury, Travelers, they're all taking increases. And when I say increases, I mean 25% and higher. So what's going to happen in the last half of 2023 and throughout 24 is consumers are going to get their bill in the mail, they're going to get a big rate increase. Naturally, you're going to want to call and get a quote somewhere else to save money, and carriers are not going to want the business. And that's a difficult position and a frustrating thing for every consumer to go through.
Some consumers are still seeing rate on their policy, primarily their home, which is due to the inflationary factors. The cost to rebuild a home has gone up, which means we have to increase coverage on the dwelling inside the policy, and when that dwelling coverage goes up, the premium comes up with it. But there hasn't been a change to the base rate, and that's very important to understand, because the primary factor around your home is reconstruction of that home, and with the cost going up because the trades are experiencing a shortfall. It takes them longer to build the home. The cost of the materials when available goes up. That's what we're seeing kind of hand in hand. Now we're going to start seeing the property and the auto insurance and other contracts get more in the base rate, as we said, 25% and up. And that's really going to cause a big knee-jerk reaction. And what we don't have the ability to do anymore is to have that flexibility to take you from one company to the next, because that appetite is so restricted, or we're on such a tight pitch count for policies that we can submit with the carrier that we simply can't help everybody, which goes against kind of what we've always done as professionals in the insurance industry.
And these rate increases that have been filed and approved by the Department of Insurance, this isn't secret. We'll put a link on the video so you can click it if you'd want to, and you can go right to the Department of Insurance websites and see every carrier and what rate increases they've been approved for. Some will say auto, some will say home, some will say umbrella. So you'll see a carrier listed multiple times for their different products. But you can see exactly what's coming and when. And I think consumers need to know that information, because just like we've all had to get used to paying $4 or $5 a gallon for gas, and food prices are up and everything's up, this is now caught up with the insurance industry as well. And you're going to see this on your home and on your auto insurance. Which, of course, then brings us to the question, well, so what can you do about it? If you're a consumer and you buy auto insurance, I have, my wife and I and 3 of our kids are all covered on my auto policy. I don't want to pay any more than anybody else either. So this is going to affect me just like it affects every other consumer. But I want to know what I'm getting into. So what can you do? Well, there's a few things you can do. First and foremost, do not let your policy cancel. Just don't let it cancel. If you have questions about the bill or anything like that, call your agent. If you're one of our clients, call us and we'll help you, because if it cancels, you may not be able to get reinstated. And then you're in a real mess. The other thing you can do is you can increase deductibles. That's not going to be satisfactory to most people, but you might want to increase your auto deductible to $1,000 or your home to $5,000 or something like that. Take on a little more of that risk, but that might be one of the ways you can save some premium. The multi-policy discount, having home and auto together, has always been the biggest discount, whatever carrier you're with. And I would recommend you look at it, because some of these carriers are going to let you add auto or add the home if you only have one of those with them. Again, it's going to be few, but some of them might allow that, and it's definitely a question worth asking. But one of the problems we're going to have, Joe, is what about people that are trying to buy a house?
The rules are changing, it seems almost daily. When you get pre-approved and start looking at homes and want to make an offer, to start working on getting that quote in the first 3 to 5 days. Especially if you're going to be in a 30 or 45 day escrow. And that's going to be the more runway we have as an agent to quote you, to see if we have bandwidth within one of the carriers that is accepting business, that we can make sure that house can be approved from an underwriting standpoint. Agents really do their due diligence to desk underwrite and make sure that the property that you're looking at buying fits inside the nice clean underwriting box that the insurance companies want. And again, we've said it several times, that underwriting is being scrutinized now more than ever, so what they're looking at on these risks has to be very clean. Tree overhangs is a big issue. Making sure that the house is painted, there's no cracks in the sidewalks or in the driveways. These are things that before we'd have the ability to maybe get taken care of after the policy is submitted and the person moves in the home. Now, not so much. If there's anything that's out there that gives them the ability to get off the risk, they're going to do that. So what I want to say is start that process early, and you may need to cast a net far and wide, checking with agents like ourselves as an independent, along with others, to see who has the capacity to submit that policy for you.
And it might be true that if you are selling a house here and buying a house here, that your current carrier may be willing to, cancel the policy that you had on your old house and put a new one in, and maybe the carrier will go along with that. So it's worth calling your current carrier. It's worth calling us. But for sure, make the call sooner than later. Maybe even before you go into escrow, you call us and say, let's talk about the insurability of this house that we fell in love with and want to buy. And then we can take a look at it, because you don't want to go into a contract on a house that is then going to have an insurance problem. That you got your loan, you got everything all set up, but then all of a sudden there's an insurance problem. Let us look at it beforehand. And just to summarize, and if I can go back to my COVID example, in the beginning we were hearing all these things, and of course none of us had been through this before. And then there was questions about, should you wipe down your groceries and should you wear a mask? And, we didn't even have vaccines yet in the beginning. And all these things were sort of up in the air. And then there was, we're going to close for 2 or 3 weeks to slow the curve, which I think was just really well intended. But as we all know, it took a lot longer than that. So if I had to give you what's our 3-week to slow the curve comparison, I think we're looking at least 6 months, probably a year of this environment, because the insurance companies are saying we need to get the rate up. The rates are going to come up. Again, not to dismiss how hard that is, but the rates are going to come up when the insurance companies feel like they're getting the exposure for the risks that they're taking. Then they will open the doors again and try to be competitive with each other in the marketplace. But until that happens, most likely you're going to renew your insurance with the company you're with until the marketplace softens and there's more competition that opens up. But this is probably going to go through the end of 2024. I hope I'm wrong, and I hope it's earlier than that. But I think we're looking at least through the end of 24.
It's unprecedented. I mean, between the two of us, we're looking at almost 50 years combined experience in the industry. So we've seen some things, and we've seen this ebb and flow in the marketplace. There are dozens of companies that have hit the pause. And when the big ones hit the pause, the domino effect really picked up steam, because that was forcing a lot more of the clients to look into the other companies, and they were hitting their saturation points in their business, and then they'd have to shut their doors, and it just started turning the lights off left and right, leaving us with an agency that we have represent close to 24 companies, and now we have a small handful that we can submit policies with, and in some cases 3 to 4 policies within the month, when we're used to submitting much more than that. And that really is going to happen to agencies like ourselves and to our peers in the industry throughout the state.
If I had to summarize all of this, I would say consumers are in for a bitter pill to swallow here in the next few months. And I hate the message. I don't like being the messenger. At the same time, I think it's fair for consumers to know exactly what's going on, because this is going to hit your wallet. And you're going to want to know, what can we do about it? And our industry, stupidly, has convinced all of us that we can always save 20% if we just shop around every 6 months. And that's not going to be the case for a while. It just isn't. Shop around and see, but I think you're going to find that these companies don't want new business. So for the next little bit, first and foremost, don't cancel your policies. Don't let it lapse. And then when you do come up on your renewal, let's talk about deductibles and coverage and see where we can find some discounts to help soften that blow of the rate increases. And we'll do our best to take care of everybody we can.